Let's talk Kraft Heinz case study part 2. And in our first video on the Kraft Heinz story, we focused on the pink shirt rule, which is the idea of selective engagement with investors among larger, well-known companies. And one of the key jobs of an IRO is to remove the unknown from the investor base or investor perception. And there's a way to analyze your success at removing the unknown in real time, and that's what we call the trust barometer. And for us, the trust barometer consists of two metrics. The first is your dividend yield, dividend over stock price, and the second is your earnings yield, which is your earnings over your stock price, or simply the inverse of the PE ratio. And what I want to do now is walk through Kraft Heinz as a real-time scenario on how the IRO and management can use these metrics of the trust barometer to analyze their success with narrative in real time and decision-making in real time. So let's look at the historical averages. The dividend yield for Kraft Heinz over the last 5 years is about 4.7%, and the earnings yield is about 8.6% for a spread of 3.9%. Fast forward to today, and the dividend yield is about 6.6%, the earnings yield is 11.2%, both higher than the 5-year averages, and the spread is about 4.6%. So in a vacuum, we're seeing a little bit of maybe this is a disconnect, maybe it's not. It's only about a 1%, it's less than 1% spread. That's pretty tight. Now, if we look at spot 2021 versus spot 2025, that spread becomes very pronounced. And in 2021, the spread was 1.64%. And fast forward today, that spread has blown out to 4.6%. So looking at it through this spot lens, we see there's been a major destruction or reduction in investor sentiments and believability of the management narrative. And what this is doing in real time is that by seeing these yields increase and be above the 5-year average, we're seeing that investor concern has increased significantly over the past 5 years. There was a significant inflection point in 2023, and what we've seen is a degradation in these yields since 2023. And what's interesting is today, Kraft Heinz has announced that they're going to stop the split of the company into two. And in real time, these metrics and the change of these metrics over the quarters of the last 5 years was illustrating to management and the IRO in real time, this strategy and your messaging is not landing with your investor base. So if you're an investor relations officer and you find yourself in a similar situation, let's walk through the mandate or the process you should follow to defend yourself. The first is communicate. You need to talk to investors outside of your top 20 shareholders in order to gain valuable intel and build relationships with new people to manage liquidity. Secondly, key debates. You need to identify the key debates and then start to address them in your materials, your earnings call, your script, your release, and your investor deck. Third, identify data sets, ideally third-party data sets that you can use to add credibility to your narrative and what you view as the outcome. Number 4, liquidity. Use the relationships you're building with new investors to start to manage the liquidity and exit those investors who don't believe your narrative. Use these new relationships to replace the people that aren't on the reservation or not in line with you. And then finally, the key learnings. Yield changes are a real-time barometer of trust among investors. And when you see blowouts in terms of spreads on these yields, it's a signal that the company needs to change the way it approaches the investor community. Thanks for watching.